Talk of the tape, the tech tear, why it's not done. That is the take today from our first guest, Rizzo. He's portfolio manager of the T. Rowe Price Global Technology Fund. It's good to see you. Welcome.
Great to see you, Scott. Thanks for having me.
Yeah, you bet. Great time to have you. Why do you think this run has room to run?
Yeah, well, you know, Scott, if we look out into the back half of the year, we have a couple things going for us. We have improving fundamentals, so revenue acceleration, operating margin expansion, and free cash flow conversion improvement for most of the stocks in the global technology universe. Moreover, when I look at the world, I see relatively reasonable valuations. You know, the global tech index is trading at roughly 22 times earnings today. Historically, that's peaked at 27 to 28 times earnings. And then, of course, we have AI, which is going to drive a lot of demand for all of technology.
Yeah, I mean, I guess arguably that's the more controversial part of your argument is valuation, because it's the place where people get hung up the most. And they say, how can you possibly justify the valuations of some of these stocks just given the runs that they've had and the kind of environment that we're in, where earnings seem to be projected to, and in a world of higher interest rates as well. So how do you defend that?
Well, you know, it really depends on what we're looking at, Scott, right? Of course, there are some expensive stocks like NVIDIA. We all know NVIDIA is expensive at over 50 times earnings. But when I look at a stock like TSMC, that's only trading at 13 or 14 times earnings today. Samsung is only trading at 1.3 times book. Apple and Microsoft, mid-20s multiples on earnings. I feel pretty good about the valuations in the tech space, broadly speaking.
But even NVIDIA, if you have to quibble with its, valuation, which is obviously high, you still think that stock has more room to run. I mean, do you think it's overvalued at the present time, or no?
Well, look, we try to invest over 18 to 24-month time horizons, and we feel really good about NVIDIA over the medium to long term. You know, they have incredible GPU technology, and its parallel processing is absolutely mission critical for all artificial intelligence improvements. We're seeing this company with absolute linchpin status in the data center, and there's a complete shortage of GPUs right now, so fundamentals should be very strong.
I mean, it's had a couple of years' worth of gains in the early part of this year, though. That's one of the headwinds weighing against it. What kind of test do you think it's going to be tomorrow when it reports earnings after the bell?
Well, definitely. It's always tough when a stock re-rates. I mean, it was only 20 times not too long ago. Now it's over 50. We'll see if the fundamentals are able to outweigh the multiple in the short term. But it's really hard to bet against Jensen and his team.
Yeah, well, investors have found out the hard way, I guess, when you do that, at least in the bounce back. I'm looking at your top 10 holdings. I've got Apple and Microsoft, NVIDIA as the top three. I don't see Alphabet and Meta. Why?
Well, you know, we're really trying to find the companies that we think are best positioned for AI, and right now that's Apple and Microsoft, in our opinion. We also like AMD and the entire digital semiconductor ecosystem. Those are the names that are really going to benefit. All these changes that are happening